what happens next.
Right. So Rohit, we were talking about banking stocks, and that's when we hit market open. So, what are you looking at it right now? Given the scenario, earnings have gone and come by, and we've seen private sector bank give, some bit of blips there. We are waiting for SBI over the weekend. But among the banking stocks, what would be your pecking order, and how should one really be looking at them? Should we just go clearly by just the earnings, or is there more? Are they the long-term play? What is your take?
So I think there's been this huge valuation gap play, right? If you look at the big stocks like Bajaj Finance, they've been underperforming no matter what the earnings are. The stock keeps falling. And on the other side, even a bit of growth on the PSU banks actually gets you a fillip on the upside. I think that pattern has not changed. And if we look at the bank Nifty per se, it doesn't actually give you a very good picture. Both on the weekly and monthly charts, it looks like it's going to weaken further. All we have right now is because it's already fallen. I can look at a near-term bump up, best case, let's say 61% of the entire fall we've seen so far is around 47,100. So I will expect maybe the bank Nifty goes up to there, but it's possible that you do see a resumption of the selling from that level in these banking names.
Sure. Let's go over to Rajiv Radhakrishnan, CIO Debt of SBI Mutual Fund. Rajiv, good morning and welcome to Moneycontrol. So, Rajiv, first things first, what is your takeaway from yesterday's Fed meeting? At least the tone of, Fed's tone really looked like very different from the last time. So, what is your takeaway? And, of course, the next thing is expectations from the budget.
Yeah. So, I think the main takeaway, I think even from a market perspective, the single important variable that market were looking at is would there be enough hints for any rate reductions happening in March? And I think that has clearly been laid to rest with the Fed clearly, not giving any indication as to whether they would be moving rates in March. But I think beyond that, what is clearly evident is, which was not probably apparent last time as well, and this time probably a bit more definitively it has come in that the rate hiking cycle is clearly over, and it's just a question of when the Fed would want to move. But at the same time, the bigger debate is would the Fed move as much as the market is still pricing in? So I think that is still open, but the single biggest takeaway is they are not in a hurry to cut in March.
Sure. So at the beginning of this show, Rajiv, I was saying my expectation from the budget is like a 10.5% nominal GDP growth, a 5.2% fiscal deficit for next year. So that leads into a, aspirational 4.5% the following year, that is in FY26. So we are on the glide path clearly, and a capex growth of 12%. What is your math, and what would you be happy with?
Yeah, so I think, from an aspirational number, the best way is that you have an equal consolidation over the next 2 years and go down to 4.5, which is what they had indicated earlier. But I believe the broader consensus in the market today is consolidation to 5.3, 5.4 for this year, and then move into 4.5 over the next year. So in terms of overall, expectations, we're looking at the net market borrowing number, slightly similar to what we have seen in this year. So about, 11.4 or something is the broader estimate of net borrowing, which should be okay from a market perspective. But I would say even at a fiscal deficit of target of say 540, what is eventually important from market angle is to what extent is that financed through market borrowing. So that is something. So right now the estimate is 65% of deficit would be financed through net market borrowing, which roughly gives you about 11.4 odd on net borrowing. So any number which is higher than that. So for example, last couple of years, the small savings collections have been a material part of financing the fiscal deficit. So, if in this coming financial year, if the government were to budget a lower number from small savings, so effectively what that would mean is that a larger percentage of the deficit would be financed through market borrowing. So that can be a negative at the margin from a market perspective. So if you have net numbers around 12 trillion, which is roughly equating to something like 70% of financing of deficit through market borrowing. Maybe at the margin it could be negative, but overall, I would say from the other question on capex, I believe yes, it won't be as high as what was budgeted last year, but there should be a marginal growth probably in line with the nominal GDP at least for next year. The overall theme would be, the fiscal consolidation exercise, because today you do not want to be in a situation where large government borrowing. So we need to look at both center and states put together. Large government borrowing should not be crowding out private sector investment. And I think today, when you have a reasonable amount of confidence on the way tax revenues are growing, and with 10.5% nominal GDP growth expectation, I think clearly the consolidation of the fisc should be, I would say it should move in that direction. So a faster pace of consolidation probably would be ideal from an overall market perspective.
Sure. So this net borrowing number, Rajiv, what is your concern? I mean, why should we have? Why are you saying that is even a risk? Because that seems like it is by design that they are hiking this small savings number, right?
Right. So most of these estimates, as I said, are based on about 65% of the deficit being financed through market borrowing. Now, the issue with small savings is, of course, it is actually indexed to government security yields, and the government actually resets it every quarter. But we have seen that over the last few quarters, you haven't indexed it lower because the rates have been slightly higher than what would have been the rates if it had been properly indexed to the government security yields. So that is one, it can go. The government could still retain the same rates, but why that can be a potential source of, I would say, risk is purely from the fact that today when you look at where the banking system is, so there is clearly a challenge to raise deposits, and deposit rates, of course, they have gone up a little bit, but still small savings remain a competing instrument to increasing bank deposit rates. And the second part is from a government cost perspective, the small savings are I would say a higher cost borrowing avenue for the government. So I believe that can be one angle which might lead to an eventual indexing to the sovereign rates, which can potentially impact the flows into small savings. So tomorrow, as rates go down and if you index it properly, the collections that you get under small savings can be lower than what has been in the last couple of years. So I think that's the point that I was trying to make, that if
understood.
you have a
fair enough, because last year we had a low-hanging fruit in terms of, the tax arbitrage and debt fund, so that could easily fix some part of the, deposit issue. This year is not an easy answer. So, okay, cool. So, any pressure points, Rajiv, for the economy, whether it is inflation, current account deficit, the fact that now US recession is also not ruled out, so you might have merchandise exports be a bit of an issue. Any pressure points that you see in the economy that may be playing in the mind of the finance minister to come up with something that could actually disappoint? Much as you would want to sort of go into that 5.2, 5.3 for next year, I mean, you have to be cognizant of all these other things. The fact that you need to balance public spending and also look at the consumption basket, which is really not as impressive as one would have wanted it to be.
Right. So I would say from an overall macro perspective, we don't really see too many pressure points, but at the same time, there are challenges. So I would, rather than pressure point, I would say the ongoing challenges would be one, of course, to which the monetary authority is engaged in, is to align inflation to target, and which is what is getting reflected in their RBI's policy stance. From on the other macro side, you have government finances which are robust. So that is something clearly positive. If at all the challenges can arise, one which you really mentioned is how do you actually have more domestic consumption related growth. So, and I think associated with that would be the challenge to incentivize private sector manufacturing. And you need to actually have a situation where the private sector starts to invest. Because the last couple of years, clearly it has been government capex that has taken the lead. But today, given the fact that we need to move towards consolidating the fisc, at some point you need to get in private sector, or private sector capex needs to start picking up. And I think that's a virtuous cycle where you see higher capex, higher income, and eventually that leading to better consumption or higher consumption. So that is one challenge to incentivize that. And the second challenge from a macro perspective would probably from what happens from external spillovers, right? You did mention about the potential slowdown in global growth. So far, global growth is relatively holding up, but yeah, I mean, with the full impact of tightening playing out and in the context of all these geopolitical frictions. So we need to see to what extent that impacts our growth, and the negative impact, if any, will come in through the export channel, right? So that is something remains a challenge rather than a pressure point on the overall macro side.
Okay, I have a couple of more economy questions, but I'll ask Stacey to go to Rohit to get some more market.
Yeah, we'll get into more broader macros, of course, because that's where the triggers will come from. But let's look at what the charts are really telling us, Rohit. If you look at the auto pack, especially today, since those are among our gainers, this one has seen quite a bit of swings, one would say, although we did see Tata Motors being, that shining star all of 2023. Are there any good surprises that we can hope from the auto pack? And, which would be, whether it would be the auto ancillaries then that one should be looking at, or the bigger, the two-wheeler names or the four-wheelers? How would one be looking at the auto sector?
Yeah, tricky. That's a tricky one because you do keep seeing rotation between each of those segments from time to time. So the near term becomes guesswork. I do think it's best to really wait, for a while before we really take that allocation call. Because a lot of the enthusiasm today will be based on, will something come out of this on some front or the other that can boost the sector as a whole. So I think today you might just see all segments fly. Right. Not just one particular segment.
I'm hoping to hear something on EVs as well. Like EVs is a theme that, we could hear the finance minister speak about also. But yeah, that play in the auto part is also quite important, I guess.
That is going to be, I think, the bigger focus, longer term, because it's something we've, I think stopped talking about in the last year. But most of 21-22, it was all about EVs and all the ancillary plays in that segment. I think that remains a long-term place to really bet.
Mm-hmm. So Rohit, if you were to just slice and dice the market and tell us, what are the segments that you see are setting themselves up for disappointment? Can you see from trade over the, like you rightly pointed out, I mean, the mood even up until 5th of January or the first week of January seemed to be very positive. And suddenly you saw a lot of stock specific volatility come in, a lot of nervousness set in. Over the last 2-3 weeks, it's been like that. Is there something that you can read, like that you have observed in the last 3 weeks, that sets up a certain pocket for disappointment?
So I think there's this thing happening over the year where sectors that became overvalued or have high valuation ratios are actually disappointing. Although hope comes in once in a while, like you just saw chemicals pick up suddenly, in the early part of this year. And people were looking at, okay, is the chemical rally really coming back? And that was an overvalued sector of the last 2 years. And then again, they've given up the most. Then you can go to new age plays, for example, and now you have bad news around Paytm. Mm-hmm. And that segment also hasn't been through its complete downdraft to really take an easy bet in my mind. So these are sectors that are easy targets when we see on the sell side, where there's already been weakness in the past. The harder part is to say whether an outperforming segment now, where the value was, right, like PSUs, where there was value and now they've run up, is that really going to stop? I can see a near-term pause, but then I've been saying that for a while because there's a lot of volume, and when there's a lot of volume, you think that, okay, is this getting overdone? But it's not happening. So the easy answer is what has underperformed continues to underperform. What has been strong probably remains strong, and we'll stick with that.
Okay. Right. So going back to Rajiv, so one thing that will surprise you in this budget and one thing that will deeply disappoint you.
Okay. Surprise would be, if they really look at a much faster pace of consolidation than 5.4 or so, which the bond market is looking at. So, and the other part, which I mentioned earlier, the financing part. So if you have a faster consolidation and more of small savings funding the deficit, then effectively the market borrowing which you have to manage will be lower. So that can be a positive surprise. On the negative side, I don't really foresee anything significantly negative. The only issue which I did allude to earlier was if the market borrowing number is, because as I said, there is clearly a logic if they might potentially have less recourse to small savings. So that could be negative from the immediate market angle. But from a material negative impact, given that there's an interim budget, so unlike the last year, probably we may not really see any negative shocks today.
Fair enough. That's all. Rajiv, thank you so much for joining this morning. So coming back to you, Rohit, you were talking about PSUs, right? So now the fact that, I mean, this is a question that really confounds me. So you have these quality banks that have been underperforming for a while, and this quarter, of course, HDFC Bank was quite a shocker. So now all these valuations are, you see a bank at 6 PE and then you have a bank at, 20 times PE. So you can make a case for anything. You can make a case for a bank which was trading at 5 times book, today available at 1.8 times book. You can also make a case for a bank that is at 6 PE and, they have liability franchise that is worth. So on charts, does it tell you anything decisively that a certain pocket is poised better than the other? So you said what is performing is performing, what is underperforming is underperforming. So is that the trend you would go with, or would you bet on a reversal?
So we don't easily bet on a reversal till we actually see it. So we will use our, say for example, I'll put on a monthly RMI, which is our momentum indicator, and try to see whether you're actually getting a reversal at that degree. And that may not happen quickly. So even if something is undervalued, it's possible that it keeps falling till you actually get a momentum reversal on price. And we're still not clearly seeing that, say, for example, in a Bajaj Finance, which has been, one of the worst performers, or are we really seeing that in an HDFC Bank or a Kotak Bank? They have reached critical supports. I mean, I can say HDFC Bank, when it bounced back, was at the, 40-month average, which is like, okay, great. This is the last 3 times it was there, it went up. So should we really say that the worst is over? But it's been flat for so long that you want to wait for a much more better confirmation from the indicators as well, telling you that, this time also it's going to repeat what it did in the past. So that's where the clarity is lacking, because they failed again and again, and you don't want to be on the wrong side of it, saying it early that, okay, this is ready to move again.
Right.
Right. In fact, I wanted to ask, because we've spoken about so many other sectors, one name that is not coming out is still the IT pack. And that one, we've been hearing from, right from the earnings, saying that, we have to wait a couple more quarters to see any kind of, but what is really, could there be any kind of tailwinds now to take this forward for the IT pack, or we're just going to have to wait it out for them, or should one be playing the mid-cap IT space instead of the bigger large cap names?
So again here, the easy answer is mid-cap versus large-cap. Yes, it's the mid-cap. But the hard answer is you can't just look at what they're doing in domestic earnings. Like the moment you look at IT pack, you start looking at what is happening to the global economy. Is it going to continue to remain strong? And actually, it's not been strong. A lot of the US rallies on the back of liquidity and hope of lower rates. But at the same time, as we heard, Powell state last night that they're going to really wait. And will waiting on higher rates lead to a further slowdown? And then does that become a pressure point for IT? So I think that pressure point is not really gone away. We have seen a relief rally because there was too much selling, but that doesn't change the risk to the IT sector. So I think that's not going to be an easy trade, and we are going to remain circumspect there for quite a while.
Sure. So we have Nilesh Shah joining in from Envision. Thank you so much, Nilesh, for joining this morning. So what is your expectation, number one?
Well, I expect this budget to be again a kind of a mark of continuity. I think this government has been on the path of fiscal consolidation in a very difficult and a challenging environment. And I would want this budget to kind of reaffirm that path. And towards a continued focus on infrastructure. I think last year's growth, where India grew significantly above the world economy, is primarily because of the government's massive hike in allocation to the infrastructure space. Yeah. I think it was a 33% hike in the spending. Infrastructure spending is now 3.3% of the GDP, versus 1.7% 10 years ago.
Yeah.
So that's kind of doubled, and I would want that to kind of continue. Because this time, what we are seeing on the infrastructure space is real, it's tangible, it's transformative. And I would want that to continue because that would create more jobs, better manufacturing activity, it would improve efficiencies, and create jobs for both urban and rural households. So I clearly believe that infrastructure is the panacea right now for India to sustain its high level of growth, and that focus should continue.
So what is the number you're expecting? Because right at the start of this show, I said I would be happy with 12%. Stacey says 15-20%. So
On the infrastructure side?
On capex spend total.
I think it should be bare minimum 20%. I think 12% is not a bad number, but if you have to sustain the momentum, and I clearly believe that over the last few years, a lot of projects have been in a trial mode. And I think some of these projects have been hugely successful, and it's time for them to now further expand the scope of those projects and truly take them pan-India. And if that is to be done, it is going to require a lot of investments, and the government will have to be the Pied Piper or the anchor investor in most of these projects. And so to that extent, my view will be that I think it should at least be a 20%.
So a 10 lakh crore becoming more like 11.5 lakh crore kind of
Yeah, absolutely.
number.
I think,
12 lakh
Mahalakshmi,
crore
this is
kind of
one
number.
space where I probably think more the merrier.
No, that of course. But
No, in the sense that I
growth.
wouldn't grudge it, because why I'm saying is because I think the multiplier effect of that spending is huge versus just kind of distributing money, okay, in the hands of individuals and households. Versus that, I clearly believe that this path of investing in infrastructure, I would not call it actually as a spending, but an investment in infrastructure, the payoffs of that are significantly larger. And that's why I probably think that I would want that number to be closer to 20% rather than 10%.
Absolutely,
In fact,
absolutely. No.
I would just want to ask him that because it's a really tight rope that we're going to have to walk. It's a interim budget. It's also coming ahead of an election. So there could be that chance of going towards that popular side. Yes. And you said you would rather have the FM put in money into the investment into infra rather than the welfare schemes. But there is another whole argument saying, that side also needs it the most. The rural economy is the one. So what would be that argument if there are measures taken to, push
and
that?
more importantly, to achieve a 20% growth on investment spent, and then, in an election year,
Correct.
with a fiscal glide path that, leads us to 4.5% year after next, isn't that going to be a challenge?
So I would think that, this administration, this government has not necessarily been very populist just because of an event. Okay, we saw it even during the COVID period.
Correct.
I mean, everybody in the world was just kind of throwing dollars in the hands of individuals, but this government actually didn't do this, and that actually has helped us to stage a much stronger recovery versus the rest of the world. So to that extent, I think the underlying DNA of the government or the thought process is very different. I don't think it does anything which is transient or ephemeral. It does this as basically more like a continuum. So there have been welfare schemes which have essentially been rolled out and executed extremely well. I think that is something which will continue. It's more a question of that the extra money that you do have, where do you allocate? And when you put that extra money into infrastructure, it doesn't mean it has to come at the cost of the welfare schemes. The welfare schemes continue. Putting more money in the hands of households is a good idea. But I clearly believe that if you have to essentially kind of stretch yourself, stretch it on the side of infrastructure. Number one. Number two is, even if you stretch right now on the welfare or the populism side, keep in mind elections are just 2 or 3 months away. It's not something which is like 12 months away. So no matter what you do for rest of the year, it may not entirely necessarily help you for elections apart from the announcement part of it. Whereas the infrastructure part of it is going to kind of will keep helping you throughout. So that's one. And two is, you right now have an economy which is vibrant. I mean, the GST collections are clearly a manifestation of the vibrancy of the economy. When your GST collections are growing north of 10%, you are going to receive a lot of capital flows from international markets because you're going to be part of bond indices. You've now become the second largest EM nation in terms of the MSCI allocations. And then third, post elections, who knows, we might be up for a new round of divestment and privatization, which will give you a lot more money for spending or investment.
Right.
So to that extent, I think the stage is set.
So we'll come to the point on divestment, but before that, what will surprise markets, what will disappoint markets?
I don't know whether in this interim budget there's a room to do it, but clearly I think if the so-called double taxation on dividends, if that's done away with, it's wishful thinking for me as an investor.
Right.
And I would want this. Finally, it'd be good to leave more money in my hands. So I think that is something which I think will surprise if that happens, because I think this has been an annual kind of a request or a demand, so to say, or annual wish list.
Multiple times we have gone back and forth, previous regime, this regime, every 2 years.
Yes, it's always part of our annual wish list.
Right.
So to that extent, expectations are low, but if it happens, I think that's going to be not just a surprise, but it essentially it will be an elation. Let me put it this way.
Right. On the contrary, would you expect the buyback tax arbitrage to go away? Will she address that? Because that is also something, that has propelled buybacks in the last.
But I think
years,
what, I don't think any incentive in favor of buyback should be withdrawn, because buybacks are a good thing. They essentially is a more capital efficient way of allocating capital. It shrinks the equity base, and if earnings keep growing, finally your earnings per share keeps growing, and therefore valuations tend to get better. So buybacks fundamentally or conceptually are more rewarding than dividends. So I don't think that you should plug the buyback route.
No,
and neither should
think
you.
about it from the finance minister's point of view. From an investor's point of view, of course, buyback is a wonderful thing for companies, for promoters, for investing shareholders. But from their point of view, there is an arbitrage. There is an arbitrage between dividend taxation and buyback taxation. Is that something the finance minister? Because if you see through and through, at least this finance minister has constantly been looking at arbitrage opportunities and trying to plug them. The dividend, debt fund arbitrage, the insurance arbitrage, all of it, like every year there is something that comes to plug an arbitrage.
So the way I would put it this way is that, first of all, the tax on dividends itself can be construed to be double taxation. Okay. So I'm just saying, if there's a case for removing that double taxation, where is the question of plugging the arbitrage between dividends and buyback? Okay. So I would honestly take it that way, and clearly I think there's a fundamental case for buybacks to be more attractive. So if this propels, and so if for example, if I were essentially part of the decision-making body on behalf of the government, not that I am, I would honestly put the case that way, saying, okay, fine, so don't pay out dividends, right, and keep doing buybacks. Please keep doing buybacks if that is more capital efficient.
That is also happening, right, automatically in the market.
Yes, so I think maybe it is the way of maybe the government or the administration nudging you, saying, please, if you think buybacks are more attractive, keep doing buybacks. We're not stopping you. The challenge is more for those companies which are already at, say, 72, 73, 74% ownership, which cannot do buyback, because then they will be breaching the public shareholding norm.
Correct.
So that's where it is.
True. Okay, from today's perspective, what is it that you talked about 20% allocation to capital budget or capital spending? Obviously, the market has also been, very bullish on certain segments that, could get a greater allocation. Where do you think the spending will go? For example, railways has been, really rallying on expectations that railway budget will see the biggest expansion or allocation this year. Where would you put your money?
I think it's going to be railways and defense. These are the two big areas where I think the spending can go. The rest I probably think will be more of kind of BAU because there are several entities. So obviously power, energy sector calls for huge amount of investments, but then there are a lot of individual companies which are anyway doing that. So I think the focus of the government should be in terms of areas where there is really not so much of private sector participation and where it is totally contingent upon the government itself taking the lead. And so to my mind, it is going to be areas like railways, defense, maybe nuclear energy. There's already been a huge talk about solar power, solar rooftops above every household. I think these are some of the areas where bound to see significantly higher outlays, and that probably is the right thing to do.
Sure. Rohit, so today if you see sharp moves in any of these sectors, let's say all the buoyant sectors, railways, power, defense, all of this, will it be an opportunity to buy into strength? Will it be an opportunity to sell into weakness?
Well, it's always good to buy into weakness and sell into strength.
Yeah, that's from an investor perspective. But you said, buy into strength, continue to buy into strength, and don't bet on reversals.
Yes. So that what that really means is that the process is to focus on the strong sectors. It doesn't mean that you buy it at a higher and higher price. Of course, when we do position sizing, so now that takes us to a very, very technical thing that we do. Then we do execute adding positions to an existing one when it starts showing more strength. Okay, so now that is a different angle that, okay, I own an X amount of shares. It confirms to me by moving up that, yes, I'm right. So I add more to it because, well, I'm right. Rather than buy something which is down and then hope that it's going to turn around. So that definitely is a strategy. But if you're freshly investing in a sector, then definitely your starting point should be good, which means it should be on the way down in a performing sector. When it pulls back is when you really make the entry.
Okay, so any disappointment today you're a buyer.
Yeah.
Okay, Nilesh, coming back to you, Paytm 20% down. What's your take?
No, I think clearly the business is challenged right now. This is a reality that all regulated businesses, while they continue to have a large opportunity to address in terms of business potential, but regulatory changes, regulatory actions always are a challenge or a risk for the business. I think the kind of circular which is out there is reasonably damning in terms of what Paytm can do or cannot do going forward, and it surely is going to put brakes on their business. And I think they'll have to really work hard to kind of resolve these observations and become compliant as soon as possible. Otherwise, it will be very damning because there is lots of competition out there, and if they essentially don't mend all of this, basically competition will kind of walk away with the business opportunity.
Yeah.
So I think it's going to take some time. I'm not entirely sure if this can just be resolved very soon. It is going to take weeks and months. They have been having these kind of challenges maybe over the last year or so. Probably this is the second or the third instance where they've had such regulatory action. So it's going to take a while, and it's going to take even a longer while for the investor confidence to come back.
Right. So this is a no-go zone.
Right now, yes, because right now it looks like a bottomless pit. Now it looks like that.
Correct.
So and Alakshmi, these are growth stocks. So it's not about saying, okay, fine, I can't do additional business.
Yeah.
The challenge is if you don't grow, there is really no case for owning this.
Correct.
Okay, then because there are many other attractive opportunities in the overall gamut of financial services, lending, credit, payments. There are a whole bunch of businesses you can go out there and buy, which are way more attractive on optical valuation parameters. So you probably want to go there if there is no growth here. And right now, it's not just the growth which is going off, but who knows, even the existing core business is vulnerable and is at risk.
And how do you size up the entire, banking pack? Because this is, every year we see at least 2-3 instances of something, a very harsh step by the RBI. I mean, not the Paytm itself, it's not the first time, but you also had this kind of instance in Bajaj Finance. You saw this earlier in, several other cases. So, is this escalating the kind of risk that we see also given the environment? Is there some heightened risk perception, or would you not read it to it like that? You would say this is very stock specific?
No, I think this is pretty much business as usual. I think the regulators will always want to be vigilant, okay, because our banking industry, our credit industry, or the overall financial services space has grown quite meaningfully over the last 5 to 10 years. I mean, this essentially is what, some 100-200 lakh crore kind of market. That cannot essentially be dealt with the way you probably would have dealt in the past. Not that it was being dealt not in such a kind of a vigilant manner. It was always. But I think it just requires
it's only the last 1 or 2 years that you've seen, for example, HDFC Bank credit card thing. In several cases, it's like you have lapses and you are stopped from doing business in that area or something like that. I mean, I don't recall that being the case, a lot.
So, Mahalakshmi, I think it's also a case of the size and the scale at which you are operating. I think when the size is small or nascent, maybe you are okay to kind of let people learn, saying okay, fine, no problem. But when you really become so big and you're like kind of a systemic risk, I think it is the responsibility of the regulator to basically try and plug it or stop any of those non-compliant things at the earliest, unless it becomes it poses a massively significant systemic risk. So I think that's where probably the regulator is focused on, saying is that this cannot just go on. Somewhere the brakes have to be applied, and so to that extent, I think it's perfectly fine for the regulator to really take a more aggressive stance.
Sure.
Right. Well, let's get waiting on those visuals to see the finance minister finally entering the parliament building there, and we'll wait on those visuals. We've already done with the photo ops, so it's pretty much going to be this. But a quick market wrap also that we'll get where our markets and what they're currently doing. We did address the top gainers and losers there in trade. We are seeing Maruti Suzuki, Eicher Motor, pretty much M&M, Hero MotoCorp, all of your big names there from the auto pack. And here you're seeing the finance minister there entering parliament with that Bahi Khata in her hand, with that tablet that holds the budget, interim budget 2024. She will be addressing the House at 11 a.m. But yeah, a lot of photo ops that happened before this, as tradition goes, with her whole team there in tow. This is, the final step, one would say, because she is there at the gates of Parliament, there from where she's going to then go in and address her sixth speech. This is for delivering a budget speech, but also the 11th one for the Modi regime as a whole. This one, Nirmala Sitharaman, changing those traditions, going paperless, and now going to be reading it from the tablet. We'll have to wait and see how long this speech will really take, because there have been different numbers that we go by, the longest one being, there. But Nirmala Sitharaman, this one being an interim one, we are hoping that it would perhaps be quite short, and maybe just all that we are hoping for and want to hear will be the ones that are going to be addressed there. But Mahalakshmi, we are perhaps going to hear from her soon. She of course meets the cabinet first, and then we're going to hear her speech only at 11 a.m. But right now, if you're looking at the markets, is the stage is set, we could say. What could really change from here, or if you'd want something to change from here, what could be those factors?
Well, that is, we have to wait for the finance minister to utter the words, and that's what will set the tone for the market from here on. But Rohit, looking at the charts, and again, any surprises in the first half an hour of trade?
So far, it's dull, open to close. Open to current prices. We've barely seen much of a movement. 30-40 points. It's just roaming around there.
So on your charts, how do these oil marketing companies look? Tell me about some of the government regulated companies. HP, BP and all have been rallying quite a lot. Does chart tell you a story?
Yeah, they have been underperforming for, I think, the last 2 years. And when you start seeing fresh performance in a particular segment, it is a sign that something new is happening. It's very similar to what happened in the segment probably after 2014, where we actually saw it outperform, and then there was a long lull. So I think it looks like we have started another phase up for the OMCs, which might not be over and is likely to probably stay that way, for months, maybe even a year or two to come. So it will remain a focus area. Of course, you have to get the entry points right, because it's already moved up. But I don't think the trend is really complete for the segment.
Sure. What is your take, Nilesh, on oil marketing companies after a long time? It's come back now. Crude seems to be not a cause for a change, not a cause of worry. People are expecting a slowdown, recession, this, that, and the other, and therefore, somehow the geopolitical risk seems to be, put behind. At least it is not top of mind, and it's not top of, or it's not dominating all conversations. Does that set the stage for a sustained bull run in oil marketing companies? Does something fundamentally change for you?
So I don't think there's anything fundamentally changed. It's just that there's obviously a huge positive sentiment for all PSU stocks, and clearly, obviously, they are a very important part of that basket. Two is that crude, of course, has kind of not spiked the way one probably would have thought in context of the geopolitical risks which are surrounding us. And so to that extent, again, it is kind of a relief. And third, optically, probably in the entire PSU pack, the valuations have been on the lower side. I don't exactly know, but they're probably in low single digits or mid single digits in terms of valuation.
Correct.
So clearly, for the classic value investor, this would surely be a huge kind of attractive zone to be in. But I don't think anything has changed fundamentally because the challenge...
I'm asking this only because, at different points in time, if you look at history, every time crude stabilizes at a certain level and you don't have, significant under recoveries. I mean, there's the refining margins are rising, marketing margins are stable. That makes a case for privatization or stake sales, very real, at least for some time until oil comes and, spoils the party again. So, and this story has been playing out for last 20 years. Every time you have this conversation, then crude goes here and there. And the reality that, this cannot be left to private hands and government will have to intervene takes over, and then it doesn't happen. So this time, because, we all think that this is a reform-oriented government, will they be able to push through? Are we really closing in on that point? Because crude is getting settled at a certain level. Will that set the stage for ownership change?
No, I don't think so, Mahalakshmi. So far, it's not been. I mean, I think the last it was on the menu of privatization or divestment was way back in 2002, 2003, 2004 at the time of the first NDA government. So after that, it's never come back on that list, and very unlikely that it's going to be there. I think one can kind of get a sense of privatization only when, first of all, the retail prices themselves are decontrolled. Today, still, I think whatever, partly or substantially, the retail prices are still decided by the government. Okay, so these are still administered prices. So till that doesn't go away, I don't think there's a case for privatization. Number one. Number two, I still think that in the government's minds, probably this is still a strategic sector. This is not a sector which is not important to the economy or not important to the nation or not important to the common man. So I clearly think in that entire wish list or the prospective menu of privatization, this would still be way down below, not there at all for now. You still have many other sectors and many other companies which can first be privatized, rather than go down to the HPCL, BPCL. So I think if somebody is trying to kind of buy into them, hoping that there would be privatization, I think one should not be basing the premise on that, unless post May there's a complete change in the thought process and we are in for a huge surprise. Then that's a different matter. But the way I see things today, I don't think these are yet on the menu of privatization or divestment.
So this is purely a buy cheap, sell cheap kind of stock?
Yeah, I don't know about the sell cheap part of it, because that you'll only have to ask the guys who's buying it cheap. But yeah, but buy cheap for sure, and at least waiting for the prices to go up significantly, so that at least the seller in his mind thinks it's a fair price and not a cheap price. Nobody sells when he thinks the price is cheap. He always sells when he thinks the price is either fair or more than fair. So yeah.
Okay, cool.
Well, it is just 1 hour to go for that budget announcement to come. So we have a whole big host of panelists, big voices that you're going to hear right here on Moneycontrol. But a quick market recap for you all. The Sensex and Nifty, both of them now trading slightly in the green, whereas the Bank Nifty and the mid-cap index, those ones have turned a bit in the negative at this hour. But we still have an hour to go before the finance minister reads out that budget. And we'll be getting you a whole host of big voices there for you. Coming up next, we have right from market veterans, economists, political analysts, all of them lined up for you on the shows ahead. So do stay tuned right here on Moneycontrol, because that's where you're going to get all the big voices. On 1st of Feb 2024, Finance Minister Nirmala Sitharaman will present the Modi government's 11th budget, this including the interim budget in 2019 being an election year. And through these years, 3 finance ministers have presented the budget, including the late Arun Jaitley, Piyush Goyal, and this being the 6th one for Nirmala Sitharaman. Let's take you through some of those highlights and big changes that came into being in these budgets so far. The first thought that comes to anyone's mind when one refers to the budget are the personal income tax rates. In 2020, the government decided to introduce the new tax structure that slashed income tax rates and reshuffle the income tax slabs.
In order to provide significant relief to the individual taxpayers and to simplify the income tax law, I propose to bring a new simplified personal income tax regime wherein income tax rates will be significantly reduced for the individual taxpayers who forego certain deductions and exemptions.
These slabs were revised once again in 2023 and 24's budget, making the new tax regime the default one, but also giving taxpayers the choice to choose between the new and the old. As of today, the rates under the new tax regime are absolutely no tax for income up to 3 lakh rupees. Income above 3 lakh and up to 5 lakh will be taxed at about 5%. For income above 6 lakhs to 9 lakhs, the income tax slab is applicable at 10%. And for income more than 12 lakhs and up to 15 lakhs, the income tax is at 20%. And for all those who have taxable income above 15 lakhs, it is a 30% income tax rate that is applicable. Now, taxpayers are always looking for more exemptions and avenues to cut down on paying their income tax. In the first budget after coming to power in 2014, the Modi government wanted to encourage more people to park their savings and hard-earned money within the banking system. And they went on to raise the annual investment limit under Section 80C from 50,000 rupees to 1.5 lakh rupees. Now, Section 80C is the most popular and favorite section among taxpayers as it allows them to reduce their taxable income by making some tax-saving investments or incurring eligible expenses. These include investments in provident funds, payment made towards insurance premiums, as well as equity-linked saving schemes, and even if you have a principal sum on your home loan. Hopes are high that in budget of 2024, it will raise this limit to about 2 lakh rupees or further include more instruments under these exemptions. Well, that was the part on direct tax. Let's look at the big reforms that we saw in the indirect tax segment with the introduction of the Goods and Service Tax or GST in 2017.
We are in the process of making history with the launch of the Goods and Services Tax. At the midnight hour, we will be launching one of India's biggest and most ambitious tax and economic reforms in history. The GST may be a destination tax, but for India, it will begin altogether a new journey.
With its motto, One Nation, One Market, One Tax, GST aims to bring unity and benefits for all stakeholders by consolidating those multiple tax laws into one single system. And in the 6 years of its being, it has reshaped the economy, pushed for digitization, while also reduced the number of frauds. The GST Council has managed to fit over 1,300 goods and 500 services under the 4 tax slabs, which is of 5%, 12%, 18% and 28% under the GST. The tax base has more than doubled since the implementation in 2017, and the monthly GST mop-up in December was close to 1.65 lakh crore rupees. The council members regularly meet on rate rationalization exercises as well as in extending the scope of GST to bring in more businesses under the reform. Lastly, let's look at the Insolvency and Bankruptcy Code or IBC that was brought in 2015 by then Finance Minister Arun Jaitley and passed in Parliament in 2016. The IBC was brought in to strengthen corporate insolvency law and also set the ground for time frames to resolve these corporate insolvencies. As per data from the Insolvency Bankruptcy Board of India, IBC has rescued 2,622 companies, 720 through resolution plans, 1,005 through appeals and reviews as well as settlements, and 897 through the withdrawal plans. This up until June of 2023. However, the falling recovery rates and the increase in resolution time has dented IBC's success. Finance Minister Nirmala Sitharaman will be presenting the interim budget on February 1st, and we will see her carry that iconic red Bahi Khata which carries an iPad with the budget 2024. Now, from a shabby Gladstone briefcase which carried the budget papers to the transformation into the digital era and the tradition of carrying and showing the budget in that red case goes way back in ages. So have you ever wondered where this tradition really came from? Well, we have you covered. In this video, we will tell you about the journey of the budget papers from the traditional red.
Well, hello and welcome back to this live stream where we are getting you an extensive coverage on the budget, counting down to the finance minister's speech. Just about an hour left for the sixth budget speech from FM Sitharaman. And of course, remember, it's an interim budget, therefore no big bang announcements expected this time around. But nevertheless, the government is expected to focus on measures that will help India continue on its growth path towards the $5 trillion economy. At the same time, thrust on social welfare schemes may be high on the agenda. Well, the key to watch out for will be how the government really strikes a balance between fiscal responsibility as well as populist measures. Well, markets are really torn between a balanced budget or a go out and spend budget. If you look at the markets, well, they have started on a positive note, not doing much, but we are defying global cues, and the Nifty above that 21,750 mark, around that 21,800 mark at the current juncture. A bank Nifty in the red, whereas mid-cap index also trading with losses this morning. But of course, I'm joining in Mahalakshmi, who's already been there with you guys. But ML, you've been speaking to a battery of experts, right? Till now, what is the sense you're getting, in terms of the big numbers to watch out for? For fiscal deficit, 5.3 to 5.5%, is this the consensus? Is this the sense you're getting that the government may roll out? Given the fact that you have spoken to a battery of experts already.
Yeah. So based on all the conversation that we have had since morning, also the brokerage, estimates of the street, a 10.5% number on the nominal GDP and about 5.3, 5.4 on the fiscal deficit. And about 15 to 20%, Nilesh Shah from Envision said he was expecting a 20% growth in capital expenditure.
Okay.
But that's a number you have to really watch. I mean, is it going to be, I would be happy with that 12%. A lot of people may be disappointed, but 15 to 20% it is. That is what the general expectation is. If you are able to do something with 15 to 20% capex budget, a 10.5% nominal GDP growth and a fiscal deficit target of 5.3, 5.4, I think the markets should be happy, unless there is, some other negative surprise in the form of taxes or, a securities transaction tax. People have been, SEBI has been concerned about, the volume of transactions that's happening on the derivative side. Yeah. If there is something that has changed there, then you could see a knee-jerk reaction in the markets. But by and by, I don't think we are expecting too much from this budget. As long as the path is clear that capex spending government will continue to do, and some populist measures, if they are steered in a way that makes it look like we are going to perk up consumption for this year, which also a key concern for stock markets also, that rural consumption is not picking up, it will be, the markets will take to it positively.
All right, that's the view then. Of course, that's the sense ML is getting from all the guests that we have spoken to already. But let's also bring on board, our next set of guests. Joining me is Madan Sabnavis, who's the Chief Economist at Bank of Baroda, as well as Andrew Holland, who's the CEO at Avendus Capital Public Markets Alternate Strategies, joining in this morning. Madan, great to have you on the show. Let me come to you first. How tricky would you say it would be for the government to balance out, a populist or and a fiscally prudent budget? Do you think it will be tricky for government to dole out populist measures, without straying away from the fiscal glide path?
Yeah, actually, I think the critical element will be what will be the overall size of the budget. Okay, because last year we had 45 lakh crores. Prior to that, we had 39 lakh crores. So to my mind, in case the government is targeting something like 50 lakh crores, that is a 10% increase over last year's total outlay, I think it will be possible to balance all the things which you have been talking about, that is the capital expenditure, social welfare, as well as going along the path of fiscal prudence and reaching that number of 5.4%. So I think the critical element will be that 50 lakh crores, because if I'm going to increase my budget by 5 lakh crores, I can do all the allocations. In fact, we are also looking at capex being something like 11.5 lakh crores. So I'm increasing it around 15%. And you can also keep following the trend growth rate and things like Nirega, the PM Kisan, the rural housing, I think water, the Jal program. So I think all these programs can be accommodated in case you have this much of space. So the size of the budget, to my mind, is very important. Which we have seen on the revenue side, tax revenues have been fairly buoyant, and we can expect similar things happening in this year too.
So, Madan, are there any pressure points that you see in the economy at this point in time, whether it is subsidies or inflation or the current account balance, anything that will make the finance minister spring up a negative surprise?
No, actually, I think the two concerns which I have, they are concerns which were there in 2019 before the pandemic also, was private sector investment as well as consumption. So we keep getting differential pictures at different points of times, and we jump to certain conclusions saying private investment has revived. But the fact is that it's not broad-based. Private sector investment has been concentrated in infrastructure-related sectors. If you look at the consumer-oriented industries, I don't see too much of investment taking place. If you look at the commentaries of these companies in their quarterly results, I think you get the same kind of picture. In terms of consumption, I think there's a case of saying jobs have not been created in the right way. Getting more Swiggy delivery boys, getting more construction workers doesn't really push up consumption to a significant extent. So we need to have meaningful jobs which are created. And to my mind, this is not within the realm of the budget. The budget cannot do anything. It's a statement of account of the government. It has to come from the private sector. It's a slowly evolving process. So what the government has done is giving direct benefits to make sure that people are able to live. Maybe you have a more decent living in terms of getting food, access to health, water, housing, so on and so forth. But finally, it's a private sector which has to click to make sure that we create these kind of jobs.
So, sure. We also have Andrew Holland from Avendus Capital. Andrew, good morning. Any specific measures, Andrew, you expect in this budget that could cheer the markets? Any specific opportunities, any specific pocket of stocks, and what measures do you expect in this budget that could sort of bring some cheer?
Yeah, well, actually, I heard what your consensus is, and I'm not going to go too far away from what you've been saying. Capital expenditure up by 10%. I think the key for the government in this budget is what I've been boring to keep saying. It's the continuity. But if that coincides with a private capex pickup, which we still really got to see across many different industries, that's really the key for the kind of the multiplier effect across the economy to really kick in the second half of 2024. And that would be aided by two other things, which are outside of the budget. One is obviously the interest rate cycle globally is going to start heading downwards. We heard from the Federal Reserve yesterday. It's not a matter of when, it's if, it's when. And secondly, with the bond, with India being included in the bond indices, we're going to see a whole lot of inflows into the bond markets, which I think, again, will push down yields here. And that could be the extra kicker that private companies need to start their capex cycle as well. So if it's a combination of government capex, but also seeing that the private capex by companies is starting to pick up, I think that's what the economy will need to get the extra push and to really kind of justify the valuations we're seeing in the markets at the moment. So no doubt, railways, defence, renewables, all going to see some money. Will they move towards extending the PLI to other industries? That would be interesting to see. And I think the other part would be, any move towards kind of increasing exposure to affordable housing. We've seen the top end of the market move. I think we need to see the kind of lower end as well start to kind of pick up a little bit more from where we are today.
Right. Coming to Madan then, Madan, we also have the bond inclusion, in the JP Morgan index this year. So we are looking at a gush of liquidity in the bond market, inflows in excess of $20 billion expected. So can the market, in that sense, stomach a higher borrowing figure? Can it take a higher borrowing figure in its stride?
No, I think it's a very good thing for us, because if we're going to see this quantum of money coming in, I think currently, if you look at the banking system, you look at the liquidity problem which is there, we are in a deficit. It's primarily a case of saying that deposits are not growing, credit is growing, investments are growing, that is investments in government securities. Now, tomorrow, if we have a situation where there is substantial amount of FPI interest which is shown in government securities, and the load which is there on banks will definitely come down. And I think this will be a positive way, purely from the point of view of the banking sector, that we will have less of these deficit issues, because the government securities, the government borrowing program can be partly financed by the FPI investment which is coming through. So I think that is the positive sign which I see. Besides, on the current on your capital account, you're seeing more dollars coming in, and the rupee stabilizing to a very large extent. In fact, there could be pressures of the rupee appreciating rather than depreciating in the next year. So the RBI will be quite busy buying up dollars rather than supplying dollars. So on the whole, I think that's going to be something which is very positive, both for the banking sector as well as for the external account of the country.
So, Madan, one question, you talked about private consumption, and private consumption has actually been the weakest part of the, GDP. And the other thing we keep talking about is private capex not picking up to the degree that you would want to see. Now, the two things are linked, right? I mean, private consumption is not picking up, and that is one of the reasons, one of the reasons why private entrepreneurs or businesses are not willing to add capacities. Probably there is no confidence that aggregate demand will go up substantially for them to sort of, take that leap of faith. Also with, global uncertainty and US recession not being completely ruled out. So will it not be imperative would you think it will be imperative for the government to do something about consumption substantially in this budget to ensure that, we fasten this process of fixed consumption so that private capex can, start to roll out as well?
No, I think we all would like the government to do something, but I think the ideology of the government in the last 5 years, at least this is the second tenure of the Indian government, has lived too much on the income tax front. So one thing is to say that if you lower the income tax rates further, there will be a case of additional income which is available with people for spending. But if you actually see the kind of cumulative inflation we have had in the last 4 or 5 years, it's been quite substantial. And even the kind of, if you look at the kind of tax cuts or the tax advantages one has if you shift over to the new income tax scheme, it really doesn't compensate for the higher inflation. And the government cannot give more because then your revenue starts getting affected. So today we have a situation where your tax revenue, both direct as well as indirect taxes, have been very buoyant. Even though the economy has been growing in the region of around 7%, we did have times when the economy grew at 8 to 9%. But now we're talking of lower growth, higher incomes, more buoyancy has come in, probably because of better collections. But I think the government will not be in a position to actually give away more. So if you see the kind of things which the government is doing, okay, you're increasing the PM Kisan scheme. Instead of 6,000, you give 7,000. Will that actually make a difference to consumption? The answer is probably not, because it's something which has not kept pace with inflation. We need to bring down that CPI inflation. And we should remember, even when we say that inflation is coming down, prices are still going up. So if you look at the last 3 years, cumulatively 25% inflation. So actually my real income has come down by 25%. So therefore, we are seeing that people at the higher income groups are spending. But when it comes to the middle class, it comes to the lower income groups, we're not seeing the same kind of thing. So I don't think the government can do anything given the constraints which you have in terms of the commitment on your expenditures and the limited buoyancy which you're going to see in future in terms of tax revenue.
Fair enough. Andrew, do you see any specific measures related to real estate or housing? Because that has really been a very buoyant part of growth. And, real estate also has a high multiplier effect on the economy. So it makes sense, at least theoretically, you can make a case for, some boost to the real estate sector that can have, a multiplier effect on the growth.
Actually, before I answer that, I beg to differ on this consumption story. I think it's more company specific that it is, people not spending money. And I think, if you look at the companies which are doing well, it's all because of, premiumization within the industry. And you've seen that, and something I talked about to you before of beverages. I mean, just look across, alcohol and non-alcoholic. It's those companies which are geared towards that, move up the premium brands, which are benefiting the most. And whenever you get to a per capita GDP of $2,500, then people's spending patterns start changing, and that's why when you first asked me about hospitality, it's going to be an area which is going to continue to grow and grow over the years. So in that respect, I'm a little different in terms of the consumption. Yeah, I mean, the government could reduce personal tax, and that would help at the fringes. But what I think they probably need to concentrate a little bit more is getting the rural economy just moving slightly ahead. And affordable housing could be something that I think the government would look at, because, as you rightly say, it shouldn't be the top end of the market. It's got to be towards the bottom end of the market. Get affordable housing going. It'll get increased jobs. It will increase spending at the lower levels, and everyone will start to move up the curve in terms of their spending going forward. So I think that's probably the thrust that I would expect to see from the government, is put it into something which will have a multiplier effect across many different industries, not just one.
Madan, do you see any possibility for the finance minister to actually increase the interest reduction on on home loans? Because that is one trick that today you see prices, especially in residential, you clearly see that there is demand only at the luxury end. Affordable is just not happening. And that is because the fundamental equation in terms of affordability is not really at levels that can create a huge boom like we saw from 2003 onwards, where the EMI versus rental equation was so attractive that it made a lot of sense for a lot of people to go out and buy take those home loans, save on taxes and build homes. Is there a case to do that? Is there room for government to do something like that, a substantial increase in interest reductions?
Yeah, there is definitely room for increasing the tax reduction on account of the interest you pay on a home. But I don't think even if it happens, it's not going to be to a very large extent. I mean, giving another 50,000 rupees is something which could definitely help. But I still do believe that when a person buys a house, you buy a house because you require a house. And it's not primarily on account of the tax benefit which you're getting. Tax benefit definitely helps. All of us are better off in case we are able to save a little bit on tax on account of the interest which is tax deductible. But that may not be a motivating factor. I say this because what we have seen in the banking sector is that even though the interest rates on mortgages have actually gone up, we haven't really seen any kind of a slowdown in credit, which means that people borrow money because you want a house, not because the interest rate is high or low, because you generally believe that maybe in your span of 15, 20 years, interest rates will go up certain times, come down certain times, so it all evens out in course of time, so therefore it happens. But this said, on affordable housing, I have a different view. I'll just quickly come to this. When we talk to some of the real estate guys who are into this particular business, they say that it's no longer as feasible as what it was earlier, because you have these constraints on what could be the cost of a unit. The cost of inputs have gone up, and it becomes a bit more challenging for them to meet this commitment on affordable housing.
No, the question I was about to ask you is, Madan, people do evaluate, the differential between rent and what is your outgo, right? I mean, if that differential is huge, I mean, it makes no sense for you to go and buy a house. And now, of course, rentals have started going up in the last 1 or 2 years in cities like Bangalore and Bombay, etc. Rentals have really gone up. So that differential has come down somewhat. But if that equation really changes, then obviously there will be a lot of people who don't have their first homes. For the case will be much stronger for that populace to really move over to start buying residentials. Right now, you don't see that demand, because all the demand that we see in real estate is really coming out of people buying real estate as an investment.
No, I agree. There are all kinds. I agree. There are all kinds of people. But normally, when you're buying a house, you want to buy an asset. So if I want to buy an asset, the interest which you're going to save in terms of tax, which anyway is not going to be that substantial. So you just think of me, I'm putting 1 crore rupees in buying a house. Will another 50,000 interest which I'm paying, which probably, let's put a 30% tax rate, or 15,000 per annum, which is around 1,200 a month, will it actually make a substantial difference to my decision on buying a house? I think that's the issue which I was placing before you.
Okay, fair enough. So you don't expect anything related to housing real estate in this budget, do you?
It could be a tokenism. There could be something done, but it's not something which is going to create an upsurge as far as the real estate industry is concerned.
Sure.
Coming to Andrew now. Andrew, in terms of PSU banking rally, the smaller ones especially have run up quite a bit. And recently there was chatter about, a merger of some smaller banks, which of course was denied by the government, right? But do you expect the government to lay down some kind of a roadmap for PSU bank mergers going forward in this budget, or do you think that could come only in the full year budget?
I don't think it's going to come in this budget. I think it would, if it's going to come, it's going to come in the kind of July budget after the elections. I don't see how that really helps, set the pace for the economy in terms of what the market's wanting. So yeah, for that subsector of the market, it would be obviously interesting news and positive news seen by the market, but I don't think it's a statement that the government would be making at this point. I would have thought the finance minister would probably concentrate on the kind of where they think divestment might be going in the years ahead, because obviously that's with the markets where they are, that would be another revenue contributor to their coffers and give them extra abilities to spend that money as well.
So on the disinvestment target itself, Andrew, what is your take? What kind of number are you expecting? Because from a stock market point of view, there is a case to be made that, stock prices are so elevated that it makes a lot of sense for the government to cash in on this. I mean, even if they were to do stake sales via the market, this is a fairly good value that you can get out of the market itself. Do you see that number going up?
I don't think it could go down from where it is, actually. I mean, it's really not done that much, to be honest. So if they could really set a feasible target and actually match it, I think the market would be happy with that. As I said, I think, and you rightly said, the markets are giving them a great opportunity to make some divestments without having to kind of sell out so cheaply with a large stake. They can do it over time. And again, it would give us extra kind of revenues to take care of the fiscal deficit too.
Madan, what is your expectation on disinvestment? What kind of number would you look at? Will the finance minister take this opportunity?
See, we haven't really been too successful when it comes to disinvestment because I think all the low-hanging fruits have already been plucked. And there's a lot of ideology which comes in the way. I've always looked at disinvestment as a kind of a balancing item. Because when we never really reach the target, that's when you put it. But I think today the government can be a bit more confident in terms of their revenue flows, in terms of the fiscal deficit number. So I have a feeling that it'll probably get a bit moderated because we should remember next year, if at all there's going to be any kind of intensive disinvestment, it's going to happen only after July or so when the new government is in place. So it could be slightly lower, but not more than what was targeted last year at 60,000 crores.
Andrew, will that be a bit of a disappointment? I mean, if at all we see a high disinvestment number, because one of the concerns with all these PSUs, last time around from 2016 onwards, when they were selling stakes down the ETF route, there was a lot of value destroyed in PSUs, right? So fresh supply of paper is essentially cutting down excess stakes and bringing them down even to 51%. Will that supply create some kind of an overhang? Will that be a negative for markets?
Well, given our expectation, let me put it slightly differently. We're expecting the market to rise in line with earnings growth, which is about 15% this year. Now, if you take all the noises coming from foreign investors, foreign direct investment companies, this will be lapped up. I mean, why wouldn't you want to be one of the fastest growing economies in the world? Yeah, valuations might be challenging, but if you're taking a more than a 1 year view, then these are companies which the markets would want to be involved in, whether it's from defence to railways and so forth. So I mean, I just don't see 60,000 crores is really a big challenge, or shouldn't be a big challenge in these markets. I mean, you're seeing IPOs raising that much money, just 4 or 5 of them, in terms of oversubscription. So I don't think they have to dilute at lower prices, or the pressure of stock coming to the market would have a hindrance on the PSUs as an overall basket.
Right, Andrew, we've seen a big sell-off when it comes to the FI community, right? Somewhere around 27,000 crore rupees worth of outflows. But going forward, do you see a reversal in trend, or would you say that the sell-off will continue, especially since the Fed has indicated that early rate cuts are really off the table at the current juncture? So what are your thoughts when it comes to the FII flows, and how is the scenario looking like right now?
See, I think Nandita, we're suffering from a couple of problems here. One is China. And, if you take a view that, China is going to continue to have its woes, then emerging market funds are seeing redemptions. And so as an emerging market manager, your highest valued market is India and your lowest market value is China. So you're bound to take some money off the table in terms of flows from India. And that's what we've been seeing whenever there's a problem in China. Now, reverse that, let's say China does some stimulus, not just on interest rates, but something to prop up the property market and give confidence to investors and buyers of property in China. Then again, that would probably see more flows going to China in the short term. But the good news would be that flows to emerging markets would come in and India would get their portion of those funds. So that's what I see. I think we'll see, anywhere between $25 to $30 billion of inflows this year by FII funds, add 30 billion from bonds. You're getting to a large inflow of liquidity into both the bond and equity markets over the next calendar year at least.
Andrew, one last question on Paytm. What's your take? My previous guest said it's a bottomless pit. What's your take?
I can't really comment on individual stocks, Mahalakshmi, but what I would say is this, is that we've seen one side of the equation and there's a conference call this afternoon at 3:30, I believe. So let's hear the other side and see what action would be taken before drawing to any conclusions of it being a bottomless pit.
Sure. All right. On that note, let's also bring on board, Sushil Kedia, who's the founder of Kedianomics. Great to have you on the show, Sushil. Before we come to what your expectations from the budget are really, I want to get in your thoughts on Paytm as well. Again, the fact that the RBI has come down heavily on Paytm Payments Bank, and of course, the management has also issued some clarifications, and they will be having a conference call later in the day. But what are your thoughts? Where is it headed?
I think Paytm will hit newer and newer lows. And there's no investment case here. There's no trading pattern except that it's a slam dunk sell, but it's going to move circuit to circuit. So those who are stuck, may God save them.
Bye.
All right. On that note, Sushil, let's first get in your expectations from the budget. Talking sector specific at the current juncture, railway stocks, they've already run up quite a bit. Today also they are buoyant ahead of the FM speech. Do you think much of the good news is already in the price, even if they, announce a higher capex figure, higher than what the markets are estimating? Do you think the good news is already in the price, or do you see, some bit of room for, upside from here onwards?
See, the speed with which things are going to move here on all the railway charts. So if any further good news comes, I would expect a climactic move of a couple of days. It's not a time to get into them. Those who have it, they should look for exits if good news comes on any further climate, 10-15% surge up. And if nothing more comes, the sell-off can be very severe in them.
All right.
So good morning, Sushil. So you're saying that markets are poised in a way that, it's time to sell on spikes.
Sorry, I never said that about the bull market. We were talking only the railway stocks.
Oh, okay.
I never said that about the whole market.
I'm sorry, my bad.
No worries. So what would you do with an HDFC Bank now, given the fact that, of course, we've seen a very significant sell-off come in on the stock price after the earnings? Would you, be a contra, would you give a contra call and, perhaps advise investors to look at that stock? Or would you say that, right now, it doesn't really make a case for investments?
See, for last 2 years, HDFC Bank, even my local Panwala bought for a 10-year view. So, the investment thesis of HDFC Bank, the superlative returns it created over 20 years, that's over. Last 2 years, it's been in a trading band. We hit an interim lower level within an interim band within the band. So, some kind of a trading respite at most. The 100 rupee odd slider up with the LIC stake coming in and, the extreme oversold status is at most. What becomes too popular is no longer a great investment destination. That is playing out in HDFC. So for the investors, I would say there are many better stocks in which you will make substantially more returns over the next 1 year. HDFC is not an investment case. It's a trader's delight trading inside a band. And from the lower band, we'll go up maybe another 100, 150 rupees.
Right. What are your thoughts about pharma stocks? I mean, just stepping aside, from budget discussions, but pharma as a pocket has seen a good run. Of course, numbers have been pretty healthy as well. Dr. Reddy's and Sun Pharma, these are the two, large cap stocks that have been doing well, right? So here on, would you say that, the pharma would emerge as a dark horse going forward?
See, we've been maintaining a view for a while where Sun Pharma and Dr. Reddy are getting very close to forming a long-term top. Those two very large stocks within pharma are behaving differently. But there are a number of mid-cap and smaller stocks which have been multi-baggers in the last 6 months, and I think the sizzle in them will continue. So what is contrary to common sense is what market will often choose to do, and when common sense will be justified, by that time the move would be over. So say if we identify a the Strides Pharma to be a 5-bagger and it's moved 3 times from the levels we entered in 6 months ago, and we still expect it to go up a few hundred rupees. Or a Biocon when it was extremely unpopular below 200 and we grabbed it with both hands for a move to 500. It's been trading right in a good trend, and I expect the next move to be 100 rupee further jump up on Biocon. Or say you might even have a Glenmark, sliding up by 20% more. So the juice is still left in the smaller pharma names, and the traders' punter's delight is where the Sun and Dr. Reddy are. And we tend to move and classify stocks with the frameworks we use a little early. So we are avoiding doing any buy trades on Sun Pharma and Dr. Reddy's. Whenever we'll get sell signals in them, we'll trade them on the short side. We'll skip the buy trades on them because capital and mental bandwidth are limited. The capital I would put on a Sun Pharma or Dr. Reddy, I'll make much more and more peaceful returns playing a Laurus or a Biocon or a Star Pharma.
Sushil, on overall markets, what is your view, and what will you take away from markets, or what are you looking at in markets today in terms of parameters, specific stocks to take you on what could be the next leg like?
See, the FMCG stocks like in Asian Paints, Lever, or to an extent even Colgate will keep on, I think, they will make reversals and start going up more. A stock like Bata, a consumption stock Bata. So these are the stocks on which, we are noticing patterns for some sustainable moves up. Or say even a tractor-driven company like in M&M, we gave a big buy call on that yesterday. That's headed towards a new high within the auto pack. Say if Tata Motors is in a totally ecstatic trend it has. So any pullback of 50 rupees comes, we'll still play it for 1,000. The large banks, the private ones are deeply oversold, and whether the budget offers anything or not, for the market momentum, the indices momentum to sustain, the private bank index I think will slide up a lot. And while the public is badly positioned on very, very heavy bullishness on PSU banks, like the PSUs that have gone into almost a climactic kind of run-up. So the PSU banks is what we are advising our clients to get out of and take only a trading view of 15 to 20% move up on the smaller private banks and maybe a 10% on ICICI and Kotak types. So, pretty much the market itself is not really positioned to expect too much from this budget. It's a vote on account. But who knows? The grandiosity with which this government has been achieving on all frontiers in the last couple of years, while Nirmala ji may have said, expect no spectacular announcements, for her it may be, a matter of aesthetics of not granting doles to 200 sectors as happens usually in budgets, but a sweeping one statement like the relaxation of the double dividend taxation or anything relating to capital markets would easily take us towards 23,000. And 23,000 from current levels is only 7-8% move. So within which, the smaller stocks, say like a pack of chemical stocks, say a Navin Fluorine, it's a high beta stock. it can easily jostle up 20% with that kind of a thing happening. So the expectations from the budget are low. This given a vote on account, and the structure of the market is positioned in a way that with this deep drop back to 21,180, the market is positioned lightly. So post-budget at 22,400 or 22,500, and then with some correction, eventually 23,000 is possible.
Sushil, with respect to defense and power, I mean, how do you size up these opportunities? These also have run up quite a bit. Are they also in a climatic state, like you said? You talked about PSU. You talked about PSU. Some of the PSU stocks hitting a climax.
Right. So yes, in that sense, most of the defense stocks, the so-called AI stocks, the drone stocks, the hype is done. So selectively within these sectors, one or two picks may be there. Like say today, even MTAR Tech is still very weak today. We've been expecting a reversal on that. It's pressed down even further. We are not giving up. And maybe in a couple of days, a reversal comes in MTAR Tech. Then for your audience, if they see the price in MTAR Tech above 21.30, that's when they should take that a firm reversal has happened, 100 rupee, 5% move up. After that, a reversal may be there. So very selective, one or two opportunities in these sectors. And yes, pretty much they are all run up. So, in terms of post-budget market behavior, Dal Chawal Ka Bazaar, Reliance going up, Adani going up, Lever and Asian Paints going up, straightforward, simple, good old investing. These stocks go up 10, 12%, index goes to 23,000 and pretty much distributed across the board. All the hype stocks also perk up. But that's where investors need to take exit out of these hypes.
You would say the same thing for power stocks as well?
Most of them.
Sushil, coming to the government's green push, right? A transition towards green energy. Where do you see a sizable opportunity when it comes to the entire EV as well as renewable energy basket?
See, this whole EV thing, I may be completely wrong. My own personal thesis is hydrogen-enabled cars will be a reality sooner than anybody expects. In fact, 2 days ago only, BMW announced they've cracked the code. So the EV may turn out to be a very high expectation sector, which is already overvalued, and it may perish before we see its true rise. So I would be skeptical right now here and not go by extremely popular opinion.
Sanjay?
In the auto sector are going to be multi-layered. So the overvalued hypes that exist in EV, and one day you might wake up to find out that EV is no longer a viable business. So I'm going to avoid anything that has got a lot of hype.
All right, that's the view then. With that, Sushil, I'm afraid we're running out of time. Thanks a lot for taking out time and joining in. Sure. We'll, of course, be touching base with you post the budget speech as well. Sure. But, on that note, of course, just about, 14 minutes to go for the budget speech by the finance minister. Of course, the big question, whether or not the government will go all out to woo the rural population. Or will the focus be on youth, women, farmers and poor in the run-up to the general elections? But on that note, let's cut across to our political desk where my colleague Shweta Punj is waiting with a guest who will be giving us his perspective as to what to expect from the budget this time around. Shweta, over to you.
Yes. Thank you so much for that. Yes, absolutely. 14 minutes to go before Finance Minister Nirmala Sitharaman presents the vote on account. Typically, a vote on account is just a statement of accounts on government's expenditure and government spending. But going by this government's track record, we've seen that in 2019, Mr. Piyush Goyal, when he presented the budget, there was something for everyone in it, whether it was the middle class or the farmers or the manufacturing sector. Let me go across now to Sanjay Kumar. Mr. Kumar is a sociologist and he has studied voting pattern behavior. Mr. Kumar, just to get a sense from you, there's so much excitement and a buzz around this budget. We heard the Prime Minister say yesterday that this budget will present an intent of the government. What is your sense that Modinomics 3.0, is this the budget that the government will use to put out a message for the 2024 elections?
Shweta, we all know that elections are just less than 100 days away, and this is a vote on account, and government would try and send out a different sections of voters, but also send out or make announcement for the promises. So I'm sure this is what is going to happen in this budget. Let us see. We need to wait for another 15 to really figure out what goes on. But I think that's my expectation that first, for especially women, especially youth, and they would also try and
Right. We are having some trouble with Sanjayji's connection over there. But as he was saying that this budget comes after the BJP is on a clear high. In the 2019 elections, when the budget when the budget was presented, it was after the BJP had lost 3 state elections, but that's not the case this time around. This budget is being presented at a time when there is a lot of sense of euphoria, be it around the Ram temple or be it around the macro numbers of the economy, whether it is India looking at 7% growth at a time when globally economies are straddling between 2 to 3 to 4% growth. So that again is a very optimistic number. We have been India is in a sweet spot that's been that's been spoken about and that's been discussed for a while now. So overarchingly speaking, and from whatever we are picking up from experts, is that this is the budget where Prime Minister Modi will set a vision for his government going forward. It will also be a budget where he reaches out directly to first-time voters and youth. We have to remember that in the economic note that was put out by the Finance Ministry few days ago, one of the big concerns that was highlighted in that note was the quality of employment, jobs. Now we have to remember that when Prime Minister Modi made a bid to come into power 10 years ago, he had promised jobs, and for various factors we find that in terms of supply and demand, where jobs are concerned, India has not been able to deliver as per expectations. Let me come across to you, Sanjayji, again. Hopefully the network would be better this time. In the state elections that were held recently, or if you were to go back to the last 2019 job election, what were the key issues that dominated voting behavior at that time?
Oh, yeah, Shweta, if you recollect the 5 state assembly elections, I can hear you. If you look at the 5 state assembly elections, one, definitely BJP was in power in Madhya Pradesh. Only one state out of the 5 states which went to poll. Definitely in the achievements of the government during last 5 years, especially welfare schemes rolled out by the BJP government in Madhya Pradesh, especially meant for women. So that was one highlight of the election campaign. But more than that, the strategy of BJP was to contest election or highlight the achievement of the central government. And you would recollect that the BJP contested the state assembly elections in the name of, or with the face of Prime Minister Narendra Modi. So the idea was, because BJP was not the ruling party in Chhattisgarh, neither was the ruling party in Rajasthan nor in Telangana. So they wanted to first, the twofold strategy, criticize the government which was in power, led by Congress and led by the BRS in Telangana, but at the same time highlight what the central government has been able to deliver to the people, which is being led by Prime Minister Modi. So that was the strategy. Right. Send out the message that if Prime Minister Modi is at the helm of affairs, you can be rest assured that this government is going to deliver.
Right. Sanjay ji, I also want to talk about how women have been at the center of Prime Minister Modi's outreach and policy making. And there is an expectation that Mission Shakti and a lot of women-focused schemes could get a further push, not only because women have been a crucial part of Prime Minister Modi's style of governance, but also because they form an important and a sizable percentage of electorate. And in the last few elections, if you see the voting trends, increasingly women are coming out to vote and they're taking their own decisions.
No, absolutely. I have no doubt that when we look at what is being made, the announcement in this present budget, there would be something for the women. There would also be mention of what this government has been able to do for the women at large in different parts of the country. When I mentioned Madhya Pradesh, so many BJP government aimed only at the women voters. It is not specific of the BJP government at the center. If you look at different state government, whether it is the government in Telangana or the government in Andhra or the government in any other state, every government now is trying to focus on the women voters. The reason you have already mentioned, Shweta, because women voters are in very large number. Now we see their electoral participation going up. The turnout of women voters have gone up. And also, when the parties are rolling out these welfare schemes aimed only for the welfare of the women, we also see some kind of a shift.
Mr. Kumar, how about the youth, and how much of a concern is jobs on the ground? When you spoke to voters in your surveys, what's been the sense that you've been getting when it comes to the performance of this government in job creation? And maybe we could see a greater emphasis on that. Besides urging the private sector to invest and create jobs, it could be a possibility that the government steps forward in the whole job creation aspect.
But the one thing is very clear: when you talk to the people on the ground, there is a lot of concern or anxieties about growing unemployment. And when I say that there is a lot of concern, any state, whether the state has re-elected the BJP government or not, if you ask this question, what is the situation with regard to employment opportunities, a very large number of people, mainly the youth, unemployed youth, are willing to say that unemployment situation has gone from bad to worse. A very large number of people, and if I want to put a number, a rough number is 70 to 80% of people, 70% of the people, voters say unemployment has gone up, which is to say employment situation has been worse. But that is not shaping people's voting choices, because they think this is a temporal thing. And also they try and compare it with previous government, and they figure out in their mental calculation that this is a situation in different proportions, but unemployment has been a problem right from the beginning. There has never been a situation when we can say that employment was given to each and every youth or each and every person who expected to get gainful employment. So they compare it with the past, and they, even if there is a lot of anxieties about unemployment, but to some extent they feel satisfied. And also, I should mention, government has shifted the narrative, and you can see that the big campaign is around become a job giver, not a job seeker. So government has shifted the focus. When we conducted among the youth, we see that a larger proportion of youth now want to establish their own, what we call startup, your own business, compared to people who want to go for a government job or a private job. I'm not saying that bigger proportion of people want to start their own job, own business, but compared to 10 years back, the proportion of people who say, we should start our own business has gone up.
Okay, well, that's an interesting insight coming in, that a lot of youth are now looking at being job creators rather than job seekers. A fascinating insight, Mr. Singh. I also, Mr. Kumar, I also want to ask you that, we have we've seen the BJP make a very concerted effort in establishing its presence in the north, and it is a very popular party in the north. However, in the southern states, it continues to push forward, but it has not been able to make the mark that it has been hoping to make. So, do you think in this budget we could see some state-specific interventions?
There is a possibility, because if you look at how politics is changing, or how there is a focus on the southern state with regard to politics. Prime Minister Modi has started campaigning, or he has been visiting the southern state more frequently now compared to the past. Also, if you look at the effort to try and send out some of the ministers who are in the present government to contest from southern state in the Lok Sabha election, just to create a buzz. So that's also an effort. So BJP is the central government led by BJP. They're trying very hard to reach out to the people in southern state through politics. They're trying to send out a message that Prime Minister cares for the southern state. Prime Minister is trying to invest. And I'm sure in the budget, there would be something specific for states like Kerala, Tamil Nadu, Telangana or Andhra to send out a message that this is a government which, though we keep talking about north-south divide, but this is a government which, even though this government has an enormous presence in the North Indian state, very little in the southern state, but they are trying to treat the southern state with more, giving southern state more importance. So there is a possibility, Shweta, something specific for the southern states may be also rolled out in this budget.
Right. Sanjay ji, we keep talking about how the government has been very fiscally prudent and so on, and this whole narrative between freebies versus fiscal prudence. But the fact is right now that the government is giving free food grains, the government is giving free gas cylinders, and different states, whether it's BJP or Congress Sun, have got a slew of, whatever you might want to call them, freebies, or you might want to call them incentives, or just generally social sector schemes designed specifically to cater to the common man. So what is the big message according to you from an electoral point of view that Prime Minister Modi would want to put out through this budget?
First, the big narrative, this is a government which cares for the people, especially those people who need support from the government. The free ration scheme has been extended for another 5 years. Something in that respect would be, spelled out in the budget. Also, the three sections of people, women, youth, and the rural people, including the farmers. So I think the government will try and send out a message that this is a government which cares for people at large, but at the same time, it also takes care of sections of the voters, sections of the people who requires more attention. I think this is the message which will certainly be there in this year's budget.
Mm-hmm. Right. So we heard the Prime Minister yesterday say that through this budget, the Finance Minister and the government will put out its intent for the year. Well, we have the Speaker in the House, and he's announcing the proceedings, the budgetary proceedings to begin.
जाने के पश्चात उसे मेंबर पोर्टल पर भी उपलब्ध करा दिया जाएगा। माननीय वित्त मंत्री जी,
Honorable Speaker, I present the interim budget for 24-25. The Indian economy has witnessed profound positive transformation in the last 10 years. The people of India are looking ahead to the future with hope and optimism. With the blessings of the people, when our government, under the visionary and dynamic leadership of Honorable Prime Minister Shri Narendra Modi, assumed office in 2014, the country was facing enormous challenges. With Sabka Saath, Sabka Vikas as its mantra, the government overcame those challenges in right earnest. Structural reforms were undertaken. Pro-people programs were formulated and implemented promptly. Conditions were created for more opportunities for employment and entrepreneurship. The economy got a new vigor. The fruits of development started reaching the people at scale. The country got a new sense of purpose and hope. Naturally, the people blessed the government with a bigger mandate. In the second term, our government, under the leadership of Honorable Prime Minister, doubled down on its responsibilities to build a prosperous country with comprehensive development of all people and all regions. Our government strengthened its mantra to Sabka Saath, Sabka Vikas and Sabka Vishwas. Our development philosophy covered all elements of inclusivity, namely social inclusivity through coverage of all strata of the society, and geographical inclusivity through development of all regions of the country. With the whole of nation approach of Sabka Prayas, the country overcame the challenges of once-in-a-century pandemic, took long strides towards Atmanirbhar Bharat, committed to Panch Pran, and laid solid foundations for the Amrit Kal. As a result, our young country has high aspirations, pride in its present, and hope and confidence for a bright future. We expect that our government, based on its stupendous work, will be gained by the people with a resounding mandate. Inclusive development and growth. Our humane and inclusive approach to development is a marked and deliberate departure from the earlier approach of provisioning up to village level. Development programs were thus provisioned. In the last 10 years, however, have targeted each and every household and individual through housing for all, Har Ghar Jal, electricity for all, cooking gas for all, bank accounts and financial services for all in record time. The worries about food have been eliminated through free ration for 80 crore people. Minimum support prices for the produce of Annadata are periodically increased appropriately. These and the provision of basic necessities have enhanced real income in the rural areas. Their economic needs could be addressed, thus spurring growth and generating jobs. Social justice. Our government is working with an approach to development that is all-round, all-pervasive, and all-inclusive. Sarvangin, Sarvasparshi, or Sarvasamaveshi. It covers all castes and people at all levels. We are working to make India a Vikasit Bharat by 2047. For achieving that goal, we need to improve people's capability and empower them. Previously, social justice was mostly a political slogan. For our government, social justice is an effective and necessary governance model. The saturation approach of covering all eligible people is the true and comprehensive achievement of social justice. This is secularism in action, reduces corruption, and prevents nepotism, prevents Bhai Bhatijawad. There is transparency and assurance that benefits are delivered to all eligible people. The resources are distributed fairly. All, regardless of their social standing, get access to opportunities. We are addressing systemic inequalities that had plagued our society. We focus on outcomes and not on outlays so that the social economic transformation is achieved. As our Prime Minister firmly believes, we need to focus on 4 major castes. They are Garib, Mahilaye, Yuva and Annadata. Their needs, their aspirations and their welfare are our highest priority. The country progresses when they progress. All 4 require and receive government support in their quest to better their lives. Their empowerment and well-being will drive the country forward. Garib Kalyan, Desh Ka Kalyan. We believe in empowering the poor. The earlier approach of tackling poverty through entitlements had resulted in very modest outcomes. When the poor became empowered partners in the development process, government's power to assist them also increases manifold. With the pursuit of Sabka Saath, in these 10 years, the government has assisted 25 crore people to get freedom from multi-dimensional poverty. Our government's efforts are now getting synergized with energy and passion of such empowered people. This is truly elevating them from poverty. Direct benefit transfer of 34 lakh crore rupees from the government using PM Jan Dhan accounts has led to savings of 2.7 lakh crores of rupees for the government. This savings has been realized through avoidance of leakages prevalent earlier. The savings have helped in providing more funds for Garib Kalyan. PM Swanidhi has provided credit assistance to 78 lakh street vendors. From that total of 78 lakh street vendors, 2.3 lakh have received credit for the 3rd time. PM Janman Yojana reaches out to the particularly vulnerable tribal groups who have remained outside the realm of development so far. PM Vishwakarma Yojana provides end-to-end support to artisans and craftspeople engaged in 18 trades. The schemes for empowerment of Divyangs and transgender persons reflect firm resolve of our government to leave no one behind. Welfare of Annadata. Farmers are our Annadata. Every year under PM Kisan Samman Yojana, direct financial assistance is provided to 11.8 crore farmers, including marginal and small farmers. Crop insurance is given to 4 crore farmers under PM Fasal Bima Yojana. These, besides several other programs, are assisting Annadata in producing food for the country and for the world. Electronic National Agricultural Market has integrated 1,361 mandis and is providing services to 1.8 crore farmers with trading volume of 3 lakh crores of rupees. The sector is poised for inclusive, balanced, higher growth and productivity. These are facilitated from farmer-centric policies, income support, coverage of risks through price and insurance support, promotion of technologies and innovations through startups. Empowering the Amrit PD, the Yuva. Our prosperity depends on adequately equipping and empowering the youth. The National Education Policy 2020 is ushering the transformational reforms. PM Schools for Rising India, PM Shri, are delivering quality teaching and nurturing holistic and well-rounded individuals. The Skill India mission has trained 1.4 crore youth, upskilled and reskilled 54 lakh youth, and established 3,000 new ITIs. A large number of institutions of higher learning, namely 7 IITs, 16 triple ITs, 7 IIMs, 15 AIMS, and 390 universities have been set up. PM Mudra Yojana has sanctioned 43 crore loans aggregating to 22.5 lakh crores of rupees for entrepreneurial aspirations of our youth. Besides that, Fund of Funds, Startup India, and Startup Credit Guarantee schemes are assisting our youth. They are also becoming Rozgar Data. The country is proud of our youth scaling new heights in sports. The highest ever medal tally in Asian Games and Asian Para Games in 2023 reflects a high confidence level. Chess prodigy and our #1 ranked player Pragnananda put up a stiff fight against the reigning world champion Magnus Carlsen in 2023. Today, India has over 80 chess grandmasters compared to little over 20 in 2010. Momentum for Nari Shakti. The empowerment of women through entrepreneurship, ease of living, and dignity for them has gained momentum in these 10 years. 30 crore Mudra Yojana loans have been given to women entrepreneurs. Female enrollment in higher education has gone up by 28% in 10 years. In STEM courses, girls and women constitute 43% of enrollment, one of the highest in the world. All these measures are getting reflected in the increasing participation of women in workforce. Making triple talaq illegal, reservation of 1/3 seats for women in the Lok Sabha and state assemblies, and giving over 70% houses under PM Awas Yojana in rural areas to women, and giving over 70% houses under PM Awas Yojana in rural areas to women as sole or joint owners have enhanced their dignity. Exemplary track record of governance, development, and performance. Besides delivering on high growth in terms of gross domestic product, the government is equally focused on a more comprehensive GDP, that is, governance, development, and performance. Our government has provided transparent, accountable, people-centric, and prompt, trust-based administration with citizen-first and minimum government, maximum governance approach. The impact of all-round development is discernible in all sectors. There is macroeconomic stability, including in the external sector. Investments are robust. The economy is doing well. People are living better and earning better, with even greater aspirations for future. Average real income of the people has increased by 50%. Inflation is moderate. People are getting empowered, equipped, and enabled to pursue their aspirations. There is effective and timely delivery of programs and of large projects. Economic management. The multi-pronged economic management over the past 10 years has complemented people-centric, inclusive development. Following are some of the major elements. 1. All forms of infrastructure, physical, digital, or social, are being built in record time. Number 2, all parts of the country are becoming active participants in economic growth. Number 3, digital public infrastructure, a new factor of production in the 21st century, is instrumental in formalization of the economy. Number 4, goods and services tax has enabled one nation, one market, one tax. Tax reforms have led to deepening and widening of tax base. Number 5, strengthening of the financial sector has helped in making savings, credit, and investments more efficient. Number 6, GIFT, IFSC, and the Unified Regulatory Authority, IFSCA, are creating a robust gateway for global capital and financial services for the economy. Number 7, proactive inflation management has helped keep inflation within the policy band. Now, the global context, Honorable Speaker, sir. Geopolitically, global affairs are becoming more complex and challenging with wars and conflicts. Globalization is being redefined with reshoring and friendshoring, disruption and fragmentation of supply chains, and competition for critical minerals and technologies. A new world order is emerging after the COVID pandemic. India assumed the G20 presidency during very difficult times for the world. The global economy was going through high inflation, high interest rates, low growth, very high public debt, low trade growth, and climate changes. The pandemic has led to a crisis of food, fertilizer, fuel, and finances for the world, while India successfully navigated its way. The country showed the way forward and built consensus on solutions for those global problems. The recently announced India-Middle East-Europe economic corridor is a strategic and economic game changer for India and others. In the words of Honorable Prime Minister, the corridor, and I quote, will become the basis of world trade for hundreds of years to come, and history will remember that this corridor was initiated on Indian soil. Unquote. Vision for Vikasit Bharat. Our vision for Vikasit Bharat is that of prosperous Bharat in harmony with nature, with modern infrastructure, and providing opportunities for all citizens and all regions to reach their potential. With confidence arising from strong and exemplary track record of performance and progress, earning Sabka Vishwas, the next 5 years will be years of unprecedented development and golden moments to realize the dream of developed India by 2047. The trinity of demography, democracy, and diversity, backed by Sabka Prayas, has the potential to fulfill aspirations of every Indian. As Honorable Prime Minister in his Independence Day address to the nation mentioned, I quote, there is no dearth of opportunities, as many opportunities as we want. The country is capable of creating more opportunities. Sky is the limit, unquote. Strategy for Amrit Kal. Our government will adopt economic policies that foster and sustain growth, facilitate inclusive and sustainable development, improve productivity, create opportunities for all, help them enhance their capabilities and contribute to generation of resources to power investments and fulfill aspirations. Guided by the principle, reform, perform, and transform, the government will take up next generation reforms and build consensus with the states and stakeholders for effective implementation. It is an important policy priority for our government to ensure timely and adequate finances, relevant technologies, and appropriate training for the micro, small, and medium enterprises, MSMEs, to grow and also compete globally. Orienting the regulatory environment to facilitate their growth will be an important element of this policy mix. Aligning with the Panchamrit goals, our government will facilitate sustaining high and more resource-efficient economic growth. This will work towards energy security in terms of availability, accessibility, and affordability. For meeting the investment needs, our government will prepare the financial sector in terms of size, capacity, skills, and regulatory framework. Aspirational Districts Program. Our government stands ready to assist the states in faster development of aspirational districts and blocks, including generation of ample economic opportunities. Development of the East. Our government will pay utmost attention to make the eastern region and its people a powerful driver of India's growth. PM Awas Yojana Gramin. Despite the challenges due to COVID, implementation of PM Awas Yojana Gramin continued, and we are close to achieving the target of 3 crore houses. 2 crore more houses will be taken up in the next 5 years to meet the requirement arising from increase in the number of families. Rooftop solarization and Muft Bijli. Through rooftop solarization, 1 crore households will be enabled to obtain up to 300 units free electricity every month. This scheme follows the resolve of Honorable Prime Minister on the historic day of consecration of Sri Ram Mandir in Ayodhya. Following benefits are expected. Savings up to 15 to 18,000 rupees annually for households from free solar electricity and selling the surplus to the distribution companies. Charging of electric vehicles. Entrepreneurship opportunities for a large number of vendors for supply and installation. Employment opportunities for the youth with technical skills in manufacturing, installation, and maintenance. Housing for middle class. Our government will launch a scheme to help deserving sections of the middle class, and I quote from Honorable Prime Minister's words, living in rented houses or slums or chawls and unauthorized colonies, unquote, to buy or build their own houses. Medical colleges. Several youth are ambitious to get qualified as doctors. They aim to serve our people through improved healthcare services. Our government plans to set up more medical colleges by utilizing the existing hospital infrastructure under various departments. A committee for this purpose will be set up to examine the issues and make relevant recommendations. Cervical cancer vaccination. Our government will encourage vaccination for girls in the age group of 9 to 14 years for prevention of cervical cancer. Maternal and child health care. Various schemes for maternal and child care will be brought under one comprehensive program for synergy in implementation. Upgradation of Anganwadi centers under Saksham Anganwadi and Poshan 2.0 will be expedited for improved nutrition delivery, early childhood care and development. The newly designed U-Win platform for managing immunization and intensified efforts of Mission Indradhanush will be rolled out expeditiously throughout the country. Ayushman Bharat. Healthcare cover under Ayushman Bharat scheme will be extended to all ASHA workers, to all Anganwadi workers and helpers. Agriculture and food processing. The efforts of value addition in agriculture sector and boosting farmers' incomes will be stepped up. Pradhan Mantri Kisan Sampada Yojana has benefited 38 lakh farmers and generated 10 lakh employment. Pradhan Mantri Formalization of Micro Food Processing Enterprises Yojana has assisted 2.4 lakh SHGs and 60,000 individuals with credit linkages. Other schemes are complementing the efforts for reducing post-harvest losses and improving productivity and incomes. For ensuring faster growth of the sector, our government will further promote private and public investment in post-harvest activities, including aggregation, modern storage, efficient supply chains, primary and secondary processing and marketing and branding. Nano DAP. After the successful adoption of nano urea, application of nano DAP on various crops will be expanded in all agroclimatic zones. Atmanirbhar Oil Seeds Abhiyan. Building on the initiative announced in 2022, a strategy will be formulated to achieve Atmanirbharta for oil seeds such as mustard, groundnut, sesame, soya bean, and sunflower. This will cover research for high-yielding varieties, widespread adoption of modern farming techniques, market linkages, procurement, value addition, and crop insurance. Dairy development. A comprehensive program for supporting dairy farmers will be formulated. Efforts are already on to control foot and mouth disease. India is the world's largest milk producer but with low productivity of milch animals. The program will be built on the success of existing schemes such as Rashtriya Gokul Mission, National Livestock Mission, and infrastructure development funds for dairy processing and animal husbandry. Matsya Sampada. It was a government which set up a separate department for fisheries, realizing the importance of assisting fishermen. This has resulted in doubling of both inland and aquaculture production. Seafood exports since 2013-14 has also doubled. Implementation of Pradhan Mantri Matsya Sampada Yojana will be stepped up to 1. Enhance aquaculture productivity from existing 3 to 5 tons per hectare. 2. Double exports to 1 lakh crore rupees, and 3. Generate 55 lakh employment opportunities in the near future. 5 integrated aqua parks will also be set up. Lakpati Didi. 83 lakh SHGs, 83 lakh SHGs with 9 crore women are transforming rural socio-economic landscape with empowerment and self-reliance. Honorable Speaker sir, their success has assisted nearly 1 crore women to become Lakpati Didi already. They are an inspiration to others. Their achievements will be recognized through honoring them. Buoyed by the success, it has been decided to enhance the target for Lakpati Didi from 2 crores to 3 crores. Technological changes, new age technologies and data are changing the lives of people and businesses. They are also enabling new economic opportunities and facilitating provision of high-quality services at affordable prices for all, including those at the bottom of the pyramid. Opportunities for India at the global level are expanding. India is showing solutions through innovation and entrepreneurship of its people. Research and innovation for catalyzing growth, employment, and development. Prime Minister Shastri, Prime Minister Lal Bahadur Shastri gave the slogan of Jai Jawan, Jai Kisan. Prime Minister Vajpayee, Atal Bihari Vajpayee ji, made that Jai Jawan, Jai Kisan, Jai Vigyan. Prime Minister Modi has furthered that to Jai Jawan, Jai Kisan, Jai Vigyan, and Jai Anusandhan, as innovation is the foundation of development. For our tech-savvy youth, this will be a golden era. A corpus of 1 lakh crore rupees will be established with 50-year interest-free loan provided. The corpus will provide long-term financing or refinancing with long tenors and low and or nil. I repeat that sentence. The corpus will provide long-term financing or refinancing with long tenors and low or nil interest rates. This will encourage the private sector to scale up research and innovation significantly in sunrise domains. We need to have programs that combine the powers of our youth and technology. A new scheme will be launched for strengthening deep tech technologies for defense purposes and expediting Atmanirbharta. Infrastructure development. Building on the massive tripling of the capital expenditure outlay in the past 4 years, resulting in huge multiplier impact on economic growth and employment creation, the outlay for the next year is being increased by 11.1% to 11,111 crore rupees. This would be 3.4% of our GDP. Railways. 3 major railway corridor programs will be implemented. These are energy, mineral and cement corridor. Number 2, port connectivity corridors. And number 3, high traffic density corridors. The projects have been identified under the PM Gati Shakti for enabling multimodal connectivity. They will improve logistics efficiency and reduce cost. The resultant decongestion of the high traffic corridors will also help in improving operations of passenger trains, resulting in safety and higher travel speed for passengers. Together with dedicated freight corridors, these 3 economic corridor programs will accelerate our GDP growth and reduce logistic costs. 40,000 normal rail bogies will be converted to Vande Bharat standards to enhance safety, convenience and comfort of passengers. Aviation sector. The aviation sector has been galvanized in the past 10 years. Number of airports have doubled to 149. Rollout of air connectivity to Tier 2 and Tier 3 cities under Udan scheme has been widespread. 517 new routes are carrying 1.3 crore passengers. Indian carriers have proactively placed orders for over 1,000 new aircrafts. Expansion of existing airports and development of new airports will continue expeditiously. Metro and Namo Bharat. We have a fast expanding middle class and rapid urbanization is taking place. Metro rail and Namo Bharat can be the catalyst for the required urban transformation. Expansion of these systems will be supported in large cities, focusing on transit-oriented development. Green energy. Towards meeting our commitment for net zero by 2070, the following measures will be taken. Viability gap funding will be provided for harnessing offshore wind energy potential for initial capacity of 1 gigawatt. Coal gasification and liquefaction capacity of 100 metric tons will be set up by 2030. This will also help in reducing imports of natural gas, methanol, and ammonia. Phased mandatory blending of compressed biogas in compressed natural gas for transport and piped natural gas for domestic purposes will be mandated. Financial assistance will be provided for procurement of biomass aggregation machinery to support collection. Electric vehicle ecosystem. Our government will expand this and strengthen the e-vehicle ecosystem by supporting manufacturing and charging infrastructure. Greater adoption of e-buses for public transport networks will be encouraged through payment security mechanism. Biomanufacturing and biofoundry. For promoting green growth, a new scheme of biomanufacturing and biofoundry will be launched. This will provide environment-friendly alternatives such as biodegradable polymers, bioplastics, biopharmaceuticals, and bioagri inputs. This scheme will also help in transforming today's consumptive manufacturing paradigm to the one based on regenerative principles. Blue Economy 2.0. For promoting climate resilient activities for Blue Economy 2.0, a scheme for restoration and adaptation measures and coastal aquaculture and mariculture with integrated and multi-sectoral approach will be launched. Comprehensive development of tourist centers. The success of organizing G20 meetings in 60 places presented diversity of India to global audience. Our economic strength has made the country an attractive destination for business and conference tourism. Our middle class also now aspires to travel and explore. Tourism, including spiritual tourism, has tremendous opportunities for local entrepreneurship. States will be encouraged to take up comprehensive development of iconic tourist centers, branding and marketing them at global scale. A framework for rating of the centers based on quality of facilities and services will be established. Long-term interest-free loans will be provided to states for financing such development on matching basis. To address the emerging fervor for domestic tourism, Honorable Speaker, sir, projects for port connectivity, tourism infrastructure, and amenities will be taken up on our islands, including Lakshadweep. This will help in generating employment also. Promoting investments. The FDI inflow during 2014 to 23 was $596 billion US, marking a golden era. That is twice the inflow during 2005 to 14. For encouraging sustained foreign investment, we are negotiating bilateral investment treaties with our foreign partners in the spirit of First Develop India. FDI is First Develop India. Reforms in the states for Vikasit Bharat. Many growth and development enabling reforms are needed in the states for realizing the vision of Vikasit Bharat. A provision of 75,000 crore rupees as 50-year interest-free loan is proposed this year to support those milestone-linked reforms by the state governments. Societal changes. The government will form a high-powered committee for an extensive consideration of the challenges arising from fast population growth and demographic changes. The committee will be mandated to make recommendations for addressing these challenges comprehensively in relation to the goal of Vikasit Bharat. Amrit Kal as Kartavya Kal. Our government stands committed to strengthening and expanding the economy with high growth and to create conditions for people to realize their aspirations. Honorable Prime Minister, in his Independence Day address to the nation in the 75th year of our Republic, said, and I quote, "We commit ourselves to national development with new inspirations, new consciousness, new resolutions as the country opens up immense possibilities and opportunities. It is our Kartavya Kal." Unquote. Every challenge of the pre-2014 era was overcome through our economic management and our governance. These have placed the country on a resolute path of sustained high growth. This has been possible through right policies, true intentions, and appropriate decisions. In the full budget in July, Honorable Speaker, our government will present a detailed roadmap for our pursuit of Vikasit Bharat. Revised estimates of 2023-24. The revised estimate of the total receipts other than borrowings is 27.56 lakh crores of rupees, of which the tax receipts are 23.24 lakh crore rupees. The revised estimate of total expenditure is 44.90 lakh crore rupees. The revenue receipts at 30.03 lakh crore rupees are expected to be higher than the budget estimate, reflecting strong growth momentum and formalization in the economy. The revised estimate of the fiscal deficit is 5.8% of GDP, improving on the budget estimate notwithstanding moderation in the nominal growth estimates. Budget estimates for 2024-25. Coming to the year 2024-25, the total receipts other than borrowings and total expenditure are estimated at 30.80 and 47.66 lakh crore rupees respectively. The tax receipts are estimated at 26.02 lakh crore rupees. The scheme of 50-year interest-free loan for capital expenditure to states will be continued this year with an outlay of 1.3 lakh crore rupees. We continue on the path of fiscal consolidation, as announced in my budget speech of 2021-22, to reduce fiscal deficit below 4.5% by 25-26. The fiscal deficit in 2024-25 is estimated to be 5.1% of GDP, adhering to that path. So the gross and net market borrowings through dated securities during 24-25 are estimated at 14.13 lakh crore rupees and 11.75 lakh crore respectively. Both will be less than that in 23-24. Now that the private investments are happening at scale, the lower borrowings by the central government will facilitate larger availability of credit for the private sector. Vote on account. I'll be seeking vote on account approval of the Parliament through the appropriation bill for a part of the financial year 2024-25. I will now move to part B. Honorable Speaker, sir, over the last 10 years, the direct tax collections have more than trebled and the return filers swelled 2.4 times. I would like to assure the taxpayers that their contributions have been used wisely for the development of the country and welfare of its people. I appreciate the taxpayers for their continued support. The government has reduced and rationalized tax rates. Under the new tax scheme, there is now no tax liability for taxpayers with income up to 7 lakh rupees, up from 2.2 lakh rupees in the financial year 2013-14. The threshold for presumptive taxation for retail businesses was increased from 2 crores to 3 crores. Similarly, the threshold for professionals eligible for presumptive taxation was increased from 50 lakh rupees to 75 lakh rupees. Also, corporate tax rate was decreased from 30% to 22% for existing domestic companies and to 15% for certain new manufacturing companies. Honorable Speaker, sir, in the last 5 years, our focus has been to improve taxpayer services. The age-old jurisdiction-based assessment system was transformed with the introduction of faceless assessment and appeal, thereby imparting greater efficiency, transparency, and accountability. Introduction of updated income tax returns, a new Form 26AS, and pre-filling of tax returns have made filing of tax returns simpler and easier. Average processing time of returns has been reduced from 93 days in the year 2013-14 to a mere 10 days this year, thereby making refunds faster. Indirect taxation. By unifying the highly fragmented indirect tax regime in India, the GST has reduced the compliance burden on trade and industry. The industry has acknowledged the benefits of GST. According to a recent survey conducted by a leading consulting firm, 94% of industry leaders view the transition to GST as largely positive. According to 80% of the respondents, it has led to supply chain optimization, as elimination of tax arbitrage and octroi has resulted in disbanding of checkposts at the state and city boundaries. At the same time, tax base of GST more than doubled, and the average monthly gross GST collection has almost doubled to 1.66 lakh crores this year. States too have benefited. States' SGST revenue, including compensation released to states in the post-GST period of 2017-18 to 2022-23, has achieved a buoyancy of 1.22. In contrast, the tax buoyancy of state revenues from subsumed taxes in the pre-GST four-year period of 2012-13 to 2015-16 was a mere 0.72. The biggest beneficiaries are consumers, as reduction in logistic cost and taxes have brought down prices of most goods and services. We have taken a number of steps in customs to facilitate international trade. As a result, the import release time declined by 47% to 71 hours at inland container depots, by 28% to 44 hours at air cargo complexes, and by 27% to 85 hours at seaports over the last 4 years since 2019, when the national time release studies were first started. Tax proposals. As for tax proposals, in keeping with the convention, I do not propose to make any changes relating to taxation and propose to retain the same tax rates for direct and indirect taxes, including import duties. However, certain tax benefits to startups and investments made by sovereign wealth or pension funds, as also tax exemption on certain income of some IFSC units, are expiring on 31/3/2024. To provide continuity in taxation, I propose to extend the date to 31/3/2025. Moreover, in line with the government's vision to improve ease of living and ease of doing business, I wish to make an announcement to improve taxpayers' services. There are a large number of petty, non-verified, non-reconciled, or disputed direct tax demands, many of them dating as far back as 1962, which continue to remain on the books, causing anxiety to honest taxpayers and hindering refunds of subsequent years. Honorable Speaker, sir, I propose to withdraw such outstanding direct tax demands up to 25,000 rupees pertaining to the period up to financial year 2009-10 and up to 10,000 rupees for financial years 2010-11 to 2014-15. This is expected to benefit about 1 crore taxpayers. 1 crore taxpayers would benefit out of this. Economy then and now. In 2014, when our government assumed the reins, the responsibility to mend the economy step by step and to put the governance systems in order was enormous. The need of the hour was to give hope to the people, to attract investments, and to build support for the much needed reforms. The government did that successfully, following a strong belief of nation first. The crisis of those years has been overcome, and the economy has been put firmly on a high, sustainable growth path with all-round development. It is now appropriate to look at where we were then. I repeat, it is now appropriate to look at where we were then till 2014 and where we are now, only for the purpose of drawing lessons from the mismanagement of those years. The government will lay a white paper on table of the House The exemplary track record of governance, development and performance, effective delivery and Jan Kalyan has given the government trust, confidence and blessings of the people to realize whatever it takes, the goal of Vikasit Bharat with good intentions, true dedication and hard work in the coming years and decades. With this, Honorable Speaker, I commend the interim budget to this august House. Jai Hind.
Item number 2, Srimati Nirmala Sitharaman ji.
So, with your permission, I rise to lay on the table the following statements under Section 3(1) of the Fiscal Responsibility and Budget Management Act 2003, Medium-Term Fiscal Policy cum Fiscal Policy Strategy Statement and Macroeconomic Framework Statement.
Item number 3, Srimati Nirmala Sitharaman ji.
Sir, with your permission, I rise to move for leave to introduce the Finance Bill 2024.
प्रश्न ये है कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए। जो सदस्य इसके पक्ष में हाँ कहें, जो सदस्य विरोध में ना कहें, मेरे विचार में निर्णय हाँ वालों के पक्ष हुआ, हाँ वालों के पक्ष हुआ। माननीय मंत्री जी विधेयक को पुनर्स्थापित करें।
So I introduce the bill.
सभा की कार्रवाई शुक्रवार दिनांक 2 फरवरी 2024 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है।